Google's new report claims Bitcoin wallets could be hacked in 9 minutes. When the third largest company in the world drops a report like this, people listen, and the entire internet has been freaking out since this drop. But I think the real interesting thing about this report is that when you look into who actually co-authored it, I think you might get the signal. And it's co-authored by Coinbase and the Ethereum Foundation. So it really makes you wonder, is this just another attack on Bitcoin? We're going to do a full breakdown of it. And I think most surprising about this is Bitcoin's still at 67K right now. Uh-oh, Nico's popping in.
Let's be specific.
Popping in early.
So Google dropped a report that said
quantum
computing is going to break Bitcoin's cryptographic algorithm.
Yes, that's what it's saying. So let me read some of these headlines, guys, because some of the headlines are actually kind of crazy. So here's the first one I'm going to pull up from Yahoo, and it goes, Google warns quantum attacks could crack Bitcoin in 9 minutes. I do have one from Forbes, which is written by our boy, Javier Bastardo, great Venezuelan Bitcoiner. And that one, I think, really gives you the hint here. It really exposes what this is about. So we're going to start here. We're going to read the Yahoo one. It goes, after announcing a 2029 target for migration to post-quantum cryptography, Google has warned that a quantum system could attack a Bitcoin transaction in about 9 minutes. Obviously, this isn't so much about just stealing, say, Satoshi's coins that are sitting there. With this new report, with this new experiment, or rather more of a theory, more of a thought experiment when you really look into it, they're basically saying that quantum will get to the point where it can steal transactions in real time before they're settled. Of course, they just said this is going to happen today, which is, I think, where the conversation really goes when I break this down. A lot of people on Twitter, basically all of the names that you are familiar with that are huge quantum FUD guys, are like panicking. They're like, I've been telling you this is happening. The price is down because quantum risk is already priced in. From a less, panic position, you realize there is still time for this to happen, and it is actually being looked into. So I'm not going to read the whole understanding the quantum, but here is what happened. On March 30th, Google published a new white paper in which researchers explained that most cryptocurrencies depend on the 256-bit elliptic curve discrete log problem, or ECDLP 256, to secure wallets and transactions. The paper found that it could take fewer than 500,000 qubits, far less than the millions of qubits cited earlier, to crack the cryptography used by cryptocurrencies like Bitcoin and Ethereum. Quote, this is an approximately 20-fold reduction in the number of physical qubits required to solve ECDLP 256. And here is how grave Google estimated the threat to be. Instead of going after old wallets, a quantum hacker could target real-time Bitcoin transactions. When a Bitcoin transaction is made, the public key is revealed for a brief period. A powerful and fast quantum computer can use the public key to arrive at the private key and steal the money. Such a quantum computer could be prepared to launch the attack in advance by making necessary calculations and then crack a Bitcoin transaction about 9 minutes, the paper warned. Obviously, roughly about 10 minutes for transactions to settle. Now, let's pop over to Forbes, because that one is very high on the FUD. That one's like, oh man, this is imminent. This is going to happen. I think this Forbes article from our boy Javier, I think this really exposes what this is all about. This titled on Forbes is Google finds quantum computers could break Bitcoin sooner than expected. And I think this is a more realistic headline here, less FUD. It does, highlight what was discovered in this report, but it's also not so much of a panic. It's not like it's over tomorrow, bro. So again, I just covered the report came out. They had Google AI researchers demonstrating that, in fact, maybe it's going to take less quantum computing qubits than we thought it was going to be, which is, I think, where the real panic came out. But this is where it gets interesting to me. The paper carries serious institutional weight. Its co-authors include Justin Drake of the Ethereum Foundation, Don Bonney of Stanford, and 6 Google quantum AI researchers led by Ryan Babash and Hartmut Nevin. Google says it engaged with the U.S. government before publishing and names Coinbase, the Stanford Institute for Blockchain Research, and the Ethereum Foundation as collaborators. I think personally that's like this is where it all comes from. If you look into it, and I looked at Justin Drake on Twitter, here is like his response to it. In his Twitter bio, it says Bitcoin security researcher, but he works at the Ethereum Foundation. So I think you're starting to see where the bias is coming from. Now, it's hard to really pinpoint what they're going to gain from this. Obviously, there's been a lot of talk about quantum computing. And in this post, I'm not going to read the whole thing, but you can see, I think, where the bias happens at the tail end of this post. And he goes, Bitcoin proof of work. Commercially viable Bitcoin proof of work via Grover's algorithm is not happening anytime soon. We're talking decades, possibly centuries away. This observation should help focus the discussion on ECDSA and Schnorr. Side note, as an unofficial Bitcoin security researcher, I still believe Bitcoin proof of work is cooked due to the dwindling security budget. So you're starting to see the incentives growing here. Not only is it backed by Ethereum Foundation and Coinbase, which, as you guys know, I'm not the biggest fan of what Coinbase has been doing, but the lead, quote unquote, right? Quote unquote, Bitcoin security researcher is a guy that works at the Ethereum Foundation and is bearish on Bitcoin's proof of work. I think that would tell everything. Personally, I think that eliminates this whole idea as a FUD, at just pure FUD, a pure attack. Now, of course, Nick Carter, you guys know Nick Carter has been beating the drum, leading this conversation about quantum computing and how we need to fix it today or it's over, bros. And he is kind of taking a victory lap, basically saying, hey, I've been telling you guys this is the case. I've been telling you that the institutions are concerned about quantum from a, like a broader Bitcoin perspective of Bitcoin, not just in a vacuum. If quantum computing did get to the point where it's cracking, cryptography, we have a lot bigger problems on our hands. And I don't think Bitcoin is going to be the biggest concern here. It literally means like the modern world is done for. Everything's going to be cracked. And yeah, we could, since we are Bitcoiners, we obviously hyper focus on Bitcoin, but that means most of traditional finance, literally, the security codes holding nuclear arms. This is a huge catastrophe if this happens. But I think that the reason we're having these conversations now is because, one, obviously, it seems with this new theory, again, I will break down exactly what it said. But with this new report, they're saying, hey, it's actually going to take less computation than we expected by a lot. And further, it might be coming up sooner than we think. The deadline, the ETA has been roughly 2030. After this report, they're moving their kind of, Q day, kind of Armageddon. Quantum's going to crack everything to 2029. So the timeline is starting to shift. And I think that is part of the conversation of just how fast things are evolving, whether it's AI, whether it's quantum computing, things are moving very quickly. And we can acknowledge that and still, have a little semblance of logic left and not just freaking out with fear and FUD and all of the kind of concern trolling here. But an interesting community note is on this Coin Bureau post about this. There's a post, obviously, talking about this headline. And check out this brutal community note. And it goes, there was no confirmed breakthrough or imminent threat. The recent Google quantum headlines are about future risk planning, not current compatibility. There is no machine today that can break any encryption, let alone Bitcoin. And that's where this conversation is interesting. And actually, before I give you a full breakdown, I saw Wicked post a good one. Let me see. Did I pull it up? I thought I pulled this one. Yeah, here we go. Here's Wicked trolling. He goes, we figured out how to make the algorithm that breaks Bitcoin run more efficiently on a quantum computer that'll never actually exist. So you're seeing the kind of fear-mongering, concern trolling about this in the headlines, and also from groups that I think are incentivized to attack Bitcoin because they're backed by a shitcoin that is Bitcoin's, quote, lead competitor here. But when you look into it, this Wicked's troll here, this meme here is literally what happened. And so going further, more solid breakthrough or breakdown from TFTC, and he goes, a quantum computer just quote broke Bitcoin, except it didn't, not even close. Google Quantum AI published a paper showing they've cut the theoretical ECDSA attack down to 1,200 logical qubits. They didn't publish the circuits, they didn't run the attack, they published a zero knowledge proof that their math works, then cited national security. Here's where we actually are. Entangled logical qubits achieved so far, 96. The coherence time is 1 to 2 seconds. Time the attack requires days. Physical qubits needed, 500,000. Largest quantum computer today is 1,200 noisy, non-error corrected qubits. That's a 100,000x coherence gap. It's not a software problem. It's a fundamental engineering problem that nobody has solved. But here's what most people are missing. Bitcoin developers, we aren't waiting for this crisis. It's already shipping. We're already talking about this. There's already conversations about, of course, updating Bitcoin's cryptography encryption so that it is quantum proof. This has been a conversation that's going on, but you are seeing that there is a lot of FUD around quantum. And the timing, I think, is also very suspicious. Like Bitcoin seem to be having a bottom, and now we get a new quantum report backed by Google, co-authored by Coinbase and the Ethereum Foundation. It's like, okay, why are they doing this now? What is the point? And it's not like this is a new conversation. Satoshi himself talked about this. We've been talking about this for over a decade at this point in Bitcoin. This is not a new conversation, but you are seeing a lot of concern trolling, a lot of fear mongering. The FUD is coming out. We're literally rolling out the same FUD that we've seen in Bitcoin for years. But now that there is, seemingly authoritative reports about this, it's starting to catch headlines. Everyone's freaking out on Twitter. You're seeing crazy headlines from the corporate press. But of course, here's conversations been happening since 2010. However, here's Satoshi quote tweeting. There's a quote, and it's, however, something happened and the signatures were compromised, perhaps integer factorization is solved, quantum computers, etc., then even agreeing upon the last valid block would be worthless. Of course, Satoshi goes, true. If it happens suddenly, if it happens gradually, we can still transition to something stronger. When you run the upgraded software for the first time, it would re-sign all your money with the new stronger signature algorithm by creating a transaction, sending the money to yourself with a stronger sig. So again, this is actually happening gradually. Yes, there seems to be, quote, breakthroughs, but again, it's in theory. Like there is no actual computer that can crack quantum. But you do see when this conversation happens, people take it and run with it. And it's a very easy headline. It's a very easy FUD, not only to dismantle, but to run with and see, I told you Bitcoin was trash. I told you Bitcoin was going to zero. And I think this is exactly where we are. Now, shout out to my boy Dom. He did a good quote tweet here. And he is quote tweeting literally one of the authors of this report. And he says, and this was in 2025, December, so not that long ago. And the quote is, to my knowledge today, quantum computers cannot yet solve any valuable real world problems. So on the one hand, one of the reporters, one of the analysts, researchers is essentially saying publicly on stage a couple of months ago, quantum computing is nowhere near this. And then on the other hand, they're like, well, in theory, it could crack it if X, Y, and Z were solved for it. So you're starting to see there really isn't Bitcoin being cracked. The headline is good. Bitcoin gets cracked in 9 minutes. Wallets are going to be hacked. Let's all panic. Let's freak out about it. But we're not there yet. The quantum computers are not even close to being able to crack anything in real life. These computers aren't built. We don't even have enough, qubits. There's not enough computation for these computers to even be built. It's really this idea. In theory, this could happen, which is where we've been for 16 years on this conversation. But now it has become a moment where there is a pressure point here. There is a conversation of people saying, see, I've been telling you we need to update Bitcoin. This is going to happen in somewhere between 2 to 9 years. We got to be ready for this. Bitcoiners have been ready for this. Bitcoiners are actively working on this. Yes, it's not a sexy headline to be like, yeah, we're going to make it quantum proof, but they're working on it. Bitcoiners are ahead of the curve. This is on the radar for Bitcoin. I don't think it's as big a concern as we're seeing from the headlines. And of course, Like the incentives here are just skewed. The researchers are not only from the Ethereum Foundation, they are quantum, AI quote experts, but even them, they're having kind of distorting point of view here. On the one hand, quantum computing is going to crack Bitcoin. On the other hand, quantum computers aren't even up to par to solve anything in real life. This is like the utmost FUD you can find right now. But as we've seen, and there has been a lot of conversation about this, which is probably why we're talking about it today, is there is a push to get this done now. And by that, I mean updating Bitcoin to be quantum proof. But further, we have seen from the institutions, whether it's Wall Street, whether it's think tanks, whether it's colleges like Stanford, they are pushing this idea that this needs to happen now or else Bitcoin is over. And that's just not the case. That's just far from the case. In actuality, we're not even near this. Yes, our timelines are shifting. Yes, in theory, we knew this was going to happen. But as I started the show, when Google says this, people do listen to it. And they just read the headlines. They don't really look into what actually happened, what the technical details really are. This is the old FUD, the same as the new FUD. Yeah. We're just not there yet, guys.
Yeah. So let me try and chime in here. So I'm going to read you guys one of Satoshi. Satoshi actually responded to this back in 2010. So a long time ago. So this is Satoshi's own words. He said, true, if it happens, someone commented and Satoshi was replying to him, said, however, if something happened and the signatures were compromised, then, and then the original poster suggested quantum computers, then even agreeing upon the last valid block would be worthless. Satoshi replied, true, if it happens suddenly. If it happens gradually, we can still transition to something stronger. When you run the upgrade software for the first time, it would re-sign all your money with the new, stronger signature algorithm. Now, a couple things I do want to talk about, right? Because this report was dropped by Google. And this would not only compromise Bitcoin, but it would essentially compromise basically the entire internet that's running on non-quantum resistant encryption, right? So it wouldn't just be Bitcoin that'd be compromised, it'd be everything else. Now, the fundamental difference between Bitcoin and everything else is that Bitcoin isn't centralized and it isn't a democracy. It requires consensus for you to have this type of fork because it would require a fork. And that's where things get a little bit tricky. And they're a little bit tricky and a little bit political. So let me give you guys one example. First, we don't know if it's even possible to crack addresses where the public key has never been exposed, right? We don't know that. We know that this is why you shouldn't reuse addresses, by the way. We know that once you use an address, and let's say you use that address again and the public key was exposed, that type of address potentially is vulnerable to quantum attacks in the future, right? The other thing I'll say is what's going to happen with Satoshi's coins? Because a lot of those coins were spent, right? So a lot of those coins, we do know the public key of a lot of those addresses, right? Of the original 1 million Satoshi coins. And that's 1 million coins. That's a lot of the supply that could potentially be, you can call it mined or, brute forced or whatever. What happens to all the other lost coins, right? So that when I mean contentious and when I mean that there's going to be a debate, that's what I'm talking about, right? Because the community is so divided on this 100%. Now, I come from the camp of I don't think Satoshi's coins should move, right? Like one of the greatest things Satoshi ever did was disappear, right? That was one of the greatest things he ever did. And I hope no one ever finds out his identity. If you're still searching for Satoshi's identity, you don't get it. You don't understand it, right? Who Satoshi was or the group of people that he was isn't important. What he left us is important, right? So anyhow, but that's still 1 million coins that could potentially be dropped on the market as a great deal of the supply, right? So that's talked about, right? What about all the other coins that are lost? What about the people that are not sophisticated enough to, switch to the new addresses? Like, because Bitcoin isn't a centralized protocol, right? It comes with trade-offs. It's not easy to just do a centralized, software upgrade like you would with an iPhone, for example. They send you like a software update at night. You go to sleep, you wake up, and then your phone has the new update, right? Like, Bitcoin doesn't work like that. Whoever's running the nodes get to choose what type of software they're running. Whoever downloads the wallets, they get to choose what type of wallets they're using, right? That's just the reality. There's still OGs that are still using like the original Bitcoin addresses to start with one, and they have like hundreds of thousands of coins. And I'm 99% sure these dudes are using paper wallets, right? Like, so again, it because it's not centralized, switching to something quantum resistant would be messy, and it would take a long time. So I think we do have to address, yes, theoretically, this could potentially be a problem. I don't think anyone is denying that. Nick Carter has been beating the battle drums all morning, or I think it was yesterday, basically saying like, look, like this is a problem. This is an issue. I'm not denying that. But what I am saying is this FUD has been around for a decade. I mean, like Satoshi was even talking about this back in 2010, right? So 16 years ago, they were talking about the quantum threats to Bitcoin. I still think that this is, at least a decade out, in my humble opinion. And there's a bunch of very smart cryptographers that are actively working on this. They're actively trying to solve this problem or trying to come up with solutions. But, switching Bitcoin, like updating the software, isn't going to be easy. It's going to require a mass consensus of a lot of people that are actively running the Bitcoin nodes and people that have Bitcoin wallets to upgrade. They're all going to have to do it individually. Like, there is no forced patch that's going to be sent out, right? But again, incentives are extremely powerful. So that doesn't really concern me. Now, a couple things I do want to mention too is this is theoretical. So this is a theoretical thing. They haven't really showed this on a bigger scale, right? What they have showed is, we found something that we can do about efficiency relating to quantum computers, but it still isn't proven whether they can build these at scale for it to potentially be a threat to Bitcoin. But clearly it's something to keep an eye on. It's something that we've known since the very beginning of Bitcoin. And I think it's important to understand what's happening here. Now, I do want to talk about what this means for your bags ultimately, because this is why we're here. A lot of us, this is why we're here. So, very simple. Bitcoin and most crypto rely on elliptic curve cryptography to generate public addresses from private keys. If a quantum computer can solve the discrete logarithm problem efficiently, an attacker could derive a private key from a public address, allowing them to steal funds or forge transactions. The biggest risk, address reuse. So you shouldn't reuse the same address. Every time you're receiving Bitcoin or you're sending Bitcoin, it should be sent to a new change address, and it should be sent to a new address entirely. You shouldn't be using old addresses. That's like the number one thing you should be doing right now if this is the type of thing that keeps you up at night. Once you send a transaction, your public key is exposed. So anyways, what are the recommendations of the study? Because I think it's important. Stop reusing wallet addresses. I think that's an obvious one. Addresses, the lost coin problem. The paper suggests the community develop policies to handle these vulnerable assets. Agility in protocol design as quantum capabilities evolve. Now, that last one, again, if we were talking about the Ethereum Foundation, this is all about, kind of the Ethereum philosophy, move fast, break things. They really do treat it like this like tech software product type thing that I don't really know what it does other than like have second layer tokens on top of it. But like, what does it solve? I have no idea. You could say it's useful for those second layer tokens on top of Ethereum. You can't deny that they don't have use. Now, do they have value? I don't think so. But you could make an argument that they do some whatever. But anyways, Ethereum's entire philosophy is, right, it's a centralized foundation. They kind of make the rules. They own the majority of the supply. And, it allows them, it gives them the ability to do these massive updates, right? So that last point, I'm a little bit hesitant on, or I'm a little bit skeptical, better said. But the lost coin problem, I would say that is up for, that's going to be a massive debate. I mean, we've been talking about the whole, the centralization of mining pools and the proposed, BIP solution to that. And look how contentious it's been within the Bitcoin community between the Luke Dash camp and the other camp, like the Bitcoin Core camp and the Knots camp. Like, it's been extremely contentious to say the least. So this type of upgrade, this type of fork, this type of, like contentious is like not even like, this is going to put the block size wars to shame, basically, because like,
I don't really think so.
I think so, man, because essentially okay, like
everyone's incentivized to be quantum proof.
Yeah, but
quantum resistance.
Who's gonna okay, but like,
I mean, I think maybe the contention is on the solution. I probably agree on that, but I think we all are going to want to upgrade.
So like, I understand that it's not people that are actively using Bitcoin that have access to those addresses. I think the problem arises when essentially this upgrade gets to decide that the Satoshi coins are unusable.
Oh yeah, okay.
That's a very slippery slope, because now all of a sudden you're basically deciding, okay, this part of the supply is unusable. If you set that type of precedent, who's to say that's not going to be used against you in the future? That goes against the censorship resistant nature of Bitcoin, right? And then you talk about mandatory migrations, right? You talk about a burn, right? Let's say you don't migrate to the new addresses by a specific time, then those coins are burned. All of that, I'm telling you guys right now, I can't even tell you guys my opinion and my answers, because the thing is that there isn't a perfect solution. It just comes with trade-offs. Like, if you do this is what the trade-offs are. If you do that, this is what the trade-offs are. And I guarantee you that there's going to be unintended consequences here, right? So, like,
without a doubt,
like that is kind of like my concern. But in terms of timeline, let's talk about this, because Google is talking about 2029, which is 2.5 years away. It's not even that far away.
It's crazy.
Do I think quantum computers are going to crack Bitcoin in 2.5 years? The answer is absolutely not. Do I think this could potentially be a problem by the mid 2030s, early 2040s? Possibly, potentially. Yeah.
That's probably a yes.
100%. But do I think this is going to be a problem in the next 2.5 years? No. And the reason I'm bringing up the next 2.5 years is because that's when the next Bitcoin cycle is. So like the higher the Bitcoin price goes, the greater the incentive for someone to solve this type of problem. Like, if you think that strategy, and Michael Saylor is basing his entire company's legacy and future on the future price appreciation of Bitcoin. If you think he's just going to sit on his hands and just be like, you know what, whatever, quantum computing, it's coming, whatever, this and that. Like, I got a bridge to sell you, bro, because like that's not going to happen. So there's a massive economic incentive by the holders of Bitcoin to solve this problem, right? And again, I don't think it's a problem to solve. I think it's basically we have to make a decision as a community on which route we're going to take and what are the trade-offs that come with that direction. To put it simply and bluntly, that's the TLDR here, ladies and gentlemen. So, yeah, I mean, this is quite interesting. We'll stay on top of it. We'll keep talking about it. But if you are to take anything away from today's show, this isn't going to happen anytime soon. So I don't think you should be worried for the next 5 years at least, which is a cycle. And then stop reusing your wallet addresses. Like if you want to protect yourself now, don't use the same wallet address. It's as simple as that. Like if you have a friend or you have like, because exchanges love to do this, right? Like they have like an address where like it saves, right? Like this is your approved address, and then you keep sending it to that same address, and then you spend from that address. That's address reuse, right? So you shouldn't do that. Every single time you withdraw or you get a new transaction, you should be looking to use a new address, and then you are essentially protected from this. So anyways, that's today's headline story. We have a heck of a show for you guys. I think we have Matt Hill joining us. Matt Hill is the founder of Start9. They make, we have the link in the video description if you guys want to check it out. They make some of the best Bitcoin nodes in the business. I personally run the Start9 Pure. It's fantastic. It's like a mini computer. It's constantly running the Bitcoin software. I can connect to it anywhere around the world. I run my node through Tor, and it's so badass. And then it has all these other really cool apps and stuff like that. Well, they're releasing a new product, and it's very exciting. We're going to be talking about that today if Matt's able to join the show. And then also we're going to be talking about, we called this, Opti and I called this, we called this so hard, right? And it's actually a good thing. I told you guys that this Bitcoin cycle in particular, the bear market signs were going to be the capitulation of these giant public companies, right? So we had some major announcements from the second largest Bitcoin treasury holder. They sold a lot of Bitcoin. They had another announcement for another treasury company. They sold some Bitcoin as well. And I told you guys back in October when I called the top, and Opti and Walker were giving me so much shit for it. I told you guys that part of the capitulation signs that you're going to see this cycle is you're going to see these companies start to announce that they're selling Bitcoin at a loss. And that is exactly what is happening. So this is a very good sign in terms of the progress that we've made in this particular bear market. We want this to happen, ladies and gentlemen. The faster this happens, the faster we reach bottom. The faster we reach bottom, then we could start picking back up again, right? So we want these types of capitulations. We want this. This is a good thing. This is nature healing itself. You also have giant public miners that are essentially they're announcing that they're pivoting entirely. They're not even mining Bitcoin anymore. They're pivoting entirely to AI. So we're going to be talking about that as well. So anyways, guys, it's going to be a great show. If you guys are enjoying the show so far, make sure to smash that like button. We're going to be right back after the break. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, ladies and gentlemen, welcome back to Simply Bitcoin Live. Before we move on, I do want to give a shout out to our partner, StampSeed, ladies and gentlemen. Don't write down your seed words on paper. Stamp them into titanium. Paper is fragile. You know, it's waterproof, fireproof. You want to stamp them. The StampSeed kit comes with everything you need: the hammer, the letter stamping tools. This is the 12-word seed kit, or the plate. They also have 24 words. You literally, stamp every letter into the plate. It's badass. It's really cool. And they literally dunked it underwater for an entire year in salt water, and it survived. Like, the data survived, right? So yeah, don't write down your seed words on paper. Don't be that guy. Anyways, at the time of recording, the Bitcoin price is $67,980. Sats per dollar, 1,471. Block height, 943,088. Realized monetary inflation, 0.83%. Market cap, 1.36 trillion. Bitcoin versus gold market cap, 4.54%. Percentage issued, 95.28%. Decline from all-time high, we're sitting at negative 46.1%. The grand scheme of things, we are just getting the party started. I remember when Opti and I were euphoric. It's so obvious in hindsight. The Bitcoin versus gold market cap was at 10%, ladies and gentlemen, 10%. If Bitcoin were to reach the market cap of gold today, that would be at roughly $1.5 million per coin. I think that if Bitcoin doesn't reach the market cap of gold, it's a failure. That's the lowest bar. That's the lowest bar. Talk about the total addressable market of 400 trillion. What's gold? 25, 30 trillion, something like that. I mean, we're not asking for much. I think Bitcoin's $100 trillion asset minimum, right? Which is more than a 50x from here. More than a 50x. That sounds fantastic, doesn't it? You just need patience. You need to go outside. Bear market years, you need to go outside.
I'm tired, boss.
You need to go outside. You need to get some sun. Anyways, let's go through some of the news today. Quite a little bit depressing, but let's talk about this. Let's check out this Yahoo Finance article. Bitcoin on the brink of its longest losing streak on record. I told you guys we're making history. Bitcoin hovered around 67,000 on Tuesday, on the brink of either snapping a 5-month losing streak or extending losses for the longest period in the token's history. Quote, Bitcoin has never recorded 6 consecutive monthly declines in its 17-year history. After declining for 5 straight months from October to February, Bitcoin was trading within 1% of February's $67,000 closing price. Bitcoin has shown more resilience than equities, as the S&P 500 has declined roughly 6% over the past month, while gold has dropped about 10%. Although the token seemed overdue for a relief rally, quote, blockchain data still indicates bearish flows, which increases our confidence that BTC retests the 60K low. Quote, March's resilience looks like a textbook relief rally within a broader crypto winter. So, yeah, this is different. This is different, ladies and gentlemen. I told you guys it was different. So let's talk.
Didn't you say it wasn't different? I think I was the one saying it was different. I was wrong. I was wrong at the time, but I think it's different.
It's different in the sense that, like, I think so. Like, this is like my base case. So I think essentially, like, the price action is essentially the same. It's just extended. That's all it is, right? And that this goes back to the whole like power law thesis, right? Which is like basically it takes twice the amount of time for Bitcoin to double every time it doubles, right? So like basically like everything's elongated. That's why, 10 years ago when me and Opti got into this space, you'd see like 50% volatility in a day. You don't kind of see that anymore, right? It's a little bit muted, but that doesn't mean that you're not going to see that 50% volatility. It's just 50% volatility over a period of time rather than just in one day, right? And I think you're going to start to see the same kind of on the upside as well, right? So anyways, is Matt joining us today? Let me see. I just messaged him.
Let's hope so. If not, I can whip something up.
We can riff, dude. It's all good. It's Tuesday, dog.
It's Monday. It's really Monday.
It is. It does feel
it feels like a Monday.
It feels like a Monday. All right. So let's talk about the other things. And again, all this is positive, ladies and gentlemen. Like from a historical perspective, the best time to buy Bitcoin are during these times. These times, where it's essentially it's all quiet on the Western front. People feel demoralized. They feel bored. I mean, this is me and Opti included, right? Like we talk about Bitcoin every single day. We didn't realize how good we had it during those euphoric times, bro. We didn't realize how good we had it during the Biden administration. A part of me wishes cackling Kamala got elected, bro, because at least we'd have something to talk about from the gulags,
Yeah, I liked when they were fighting us.
Like when they were fighting us, like every day we were like, all right, guys, breaking news. Now like so much winning, bro. Golden era.
So much winning and
World War III around the corner, baby. Anyways, but at least we have a pro Bitcoin president. Anyways,
is that a hint of sarcasm?
Dude, I mean, look, I'm super happy with everything Trump has done for the industry. I'm super happy with everything. The only thing I'm kind of bummed about is the one promise that I think was the most important promise in Nashville, which is like, I'm going to take your Bitcoin to the moon. Dude, when he was inaugurated, Bitcoin was at 109,000. It's at 67,000 today, almost 2 years into his presidency. Like all the other stuff, regulatory clarity, whatever, not even the clarity thing. I'm not even going to get into that. But like, the regulatory environment, et cetera, like, you could say all that's fine. That's great. Maybe it's building a foundation. Maybe I lack patience. But I was promised that Bitcoin was going to go to the moon and that we were going to have fun with our Bitcoins. That's what I was promised. I'm not having fun with my Bitcoins right now, bro. I'm not. I'm feeling pain.
Tired, boss.
I'm feeling pain and I'm tired as well.
I'm just tired.
Anyways, so another good sign, and this was quite interesting. So Mara sells $1 billion in Bitcoin at a loss to pay down debt as hedge fund CIO warns just the beginning. Holy shit. Mara Holdings sold 15,133 Bitcoin between March 4th and March 25th for approximately $1.1 billion, using the proceeds to repurchase roughly $1 billion of its convertible notes due in 2030 and 2031. The sale slashed Mara's holdings by about 28%. The kicker, Mara disclosed separately that it bought 4,267 BTC in 2025 at an average price of around 111,000, roughly 45,000 above where the token trades today. The CIO of hedge fund Lurker Capital wrote on X that Mara is now a distressed seller, calling this just the beginning of a major unwind across the sector. Ladies and gentlemen, this is what we have been waiting for. This is what capitulations look like. This is what they look like. They've always looked like this. We predicted this was going to happen. I told you guys in October of 2025, I said, this cycle ends when you see these giant companies start to sell Bitcoin at a loss. I told you guys. I've been telling you guys this for months. And it seems like it's starting to happen. Now, what's crazy with this sell is that now Mara isn't the second largest Bitcoin treasury company. I don't even know. I wouldn't even consider it a treasury company, but
I mean, they had the second biggest
they are
treasury.
the second largest publicly traded company with a Bitcoin, with Bitcoin. Now they're third. Second place now is 21, which is Jack Mallers and Tether and SoftBank's company. So anyways, Thompson's thesis centers on a paradox. Bitcoin mining economics are in crisis, and the only way they heal is through a decline in hash rate, which is being driven by companies like Core Scientific, TeraWulf, Cyber Mining, and Iron pivoting away from mining. The hash rate decline is healthy for network long-term, but the near-term problem is that public miners hold close to 80,000 BTC on their balance sheets. As they become AI companies, they both need capital to fund the build-out and have no reason to hold Bitcoin anymore. On-chain data from CryptoQuant backs him up. The miners position index has climbed to a 7-day high, signaling a broader uptick in miner outflows beyond just Mara. BTC dropped below 70K on the news. The average all-in cost of mining a single BTC currently sits at $78,000. TeraWulf ended 2025 with 3 BTC on its balance sheet. Iron liquidated all mined Bitcoin daily. Cypher sold 214 million in BTC last year. Mara still holds 38,689 BTC after the sale, making it the largest remaining miner treasury and a potential source of further supply pressure. On Polymarket, traders price a 51% chance Bitcoin dips to 45,000. Bring it on, baby. 27% chance it hits 35,000, and only an 18% chance it regains 120,000 this year. So, ladies and gentlemen, I told you guys, we're about, I would say, if you were to ask me, 30 to 40% through the bear. What you need to focus on these next 6 to 7 months is survive. That's it. You got to survive. You got to take as much capital as you can. You got to buy the dip and you got to survive. That's all you got to do. Right. But what I will tell you is this, which is quite interesting. Ultimately, this is very, very good for the industry. The strongest miners are going to continue mining Bitcoin. They're going to continue, and these miners essentially saying, hey, we're pivoting, we're getting out of the Bitcoin mining space completely, actually creates an opportunity for the public miners that continue to weather the storm and to mine Bitcoin. This is nature healing itself. The most efficient miners will survive. The less efficient miners are going to try to pivot. They're going to try to sell Bitcoin. And this just tells me that they were over leveraged. That's what it tells me, that they put themselves in a position where, perhaps, they weren't essentially making, the best decisions. Because if they were, then they wouldn't have to, sell their bags essentially. So it's not only those companies, right? Bitfarms conference, BITF to rebrand as Keel Infrastructure, pivoting from Bitcoin mining to AI data centers. This news dropped today. Another publicly traded Bitcoin miner. So I'm calling it right now. The miners that survive and they stick around to Bitcoin, they are going to be very well positioned when the price of Bitcoin recovers. I remember in my career in this industry, one of the biggest regrets that I've had is I got into the industry through Bitcoin mining, and I capitulated in 2018. I said, I've had enough. I can't take this anymore. My business is losing money. This isn't a good idea. My mining business is still my Twitter handle. It was BitVolt. That was the name, right? And I said, if I kept going in 2018 and 2019, 2020, I would have made a fortune. I'd probably have a mining company today, not a media company, right? So, again, the ones that survive are the ones that are going to thrive when the price starts to pick up again. That's my opinion. And this is also an opportunity, because a lot of this hash rate is going to go away, for other miners to come in and, be a bigger percentage of the overall hash rate, which means more rewards for them. So last but not least, before we move on, let's have a quick commercial break and then we will talk about this. We're going to be right back in just a sec, ladies and gentlemen.
I want to give a shout out to our partner, Ledn, the leader in Bitcoin-backed loans. Ledn lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys, and not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledn has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
All right, ladies and gentlemen, before we get into the rest of the story today, again, guys, this is good. This is very good. All of this is wonderful news. This all indicates capitulation. Capitulation is good. That means that we're on the way to the bottom, right? When you have, to use that article's own quotes, distressed sellers, meaning sellers that they normally wouldn't want to sell in these situations, but they have to sell because of the economics of their business. That's a good thing. That's a good thing. That means we're near the bottom. So anyhow, or at least we're starting to go into the process of finding a bottom, which is very good to hear because we're in March. Oh man. Imagine if this happened later, it would just extend the pain, right? So this is good. This is very good. And from an opportunistic, I don't even know what.
I don't know what you're trying to say. A great opportunity.
I don't know. Whatever.
I did.
Anyhow, listen. From a risk-adjusted return, I'll phrase it like this, much better. This year is the best year, historically speaking, from buying Bitcoin right now. After it's 45%, even if it goes lower, like let's say it goes from 67, it goes down to 45. Let's say it does that, right? Actually, it can get worse. It could totally get worse. 100%. Yeah, I've been saying, guys, have you not been tuning into this show? Opti's been making, now Opti's starting to believe because he's not pushing back so hard. I'm
hedging my bets.
Opti's not pushing back so hard. It's funny because I had the honor of being invited on Walker's show on Roxham, and the first thing I started with, I was like, bro, I told you so. Look, this is part of the healing process, right? This is all part of the healing process. Like the hash rate going down, like companies pivoting away, companies essentially selling Bitcoin. This is what bottoms look like. And we haven't had a full capitulation event yet. It happens every cycle, by the way. Every cycle, there's one major effing blow up. It's like huge. We don't know what that is yet. We have no idea what that is yet. So we'll wait and see. We'll wait and see what happens. Anyways, so I'm going to keep going with more kind of like news of just capitulation. Again, same day that Bitfarms announces that they are pivoting away from Bitcoin mining to AI data centers. Same day that happens, Nakamoto, again, one of the larger treasury companies, sells roughly 5% of its Bitcoin holdings, offloading 284 Bitcoin. Goes on to say, Nakamoto Holdings said it sold about 284 BTC for $20 million in March, marking a rare reduction in its holdings as it pivots towards a Bitcoin treasury strategy. The proceeds will be used to support working capital and fund operations following its acquisitions of BTC Inc. and UTXO, two businesses central to its transition into a Bitcoin-focused platform, the company said in its full-year earnings filings. The company went public in May by merging with Kindly MD, a healthcare provider, and raised $710 million to pursue the treasury strategy. The March sale represents some 5% of the company's Bitcoin holdings and took place despite its stated intention to continue accumulating the asset. Based on the disclosure, the average sale price was around $70,422 per coin. The move highlights growing liquidity pressures. Nakamoto has an 8%, $210 million USDT loan from Kraken, secured by a majority of its Bitcoin, limiting financial flexibility and increasing the potential need for further asset sales to meet the interest payments. According to the 10K filing, the company remains unprofitable, reporting a pre-tax loss of $52 million for the year ended in December 31st, wider than the $3.6 million loss the previous year. The drop was driven primarily by a $166 million slump in the value of its digital assets due to a late 2025 Bitcoin price decline. The shares have fallen 99% from their all-time high in May. So a couple things to say. And this isn't just Nakamoto. I had the pleasure of being able to interview Jack Mallers at the Plan B forum in El Salvador. If you guys want to check out the interview, it's quite interesting. First time I ever got to interview Jack. It's actually on Rumble right now. It's a Rumble exclusive. And essentially these treasury companies are realizing that they need to become businesses, right? Just because you hold Bitcoin doesn't mean you're a business. And I think that there was a time last year, which we famously memed and called the paper Bitcoin summer. We said that, what was happening, it doesn't matter what we said, but what was happening was essentially these treasury companies, there was like a mania that was happening. So essentially like they all like 10, 20, 30, 40x in a very short period amount of time, right? Like Metaplanet and Nakamoto, and they would even go up and down based on news. Like Nakamoto hired like a very well-known salesman in the Bitcoin space, and the stock jumped like 40%, right? But that mania went away, right? And these treasury companies, like if you think about it, what is the business model, right? I understand strategy, right? Strategy, I think, sticks out from the rest. First, it has first mover advantage. Second, it has an underlying business behind it. Even though it's not quite apparent, Strategy is a software company, right? They sell software. So there is an underlying business behind it. Do the underlying businesses behind a lot of these other treasury companies justify the valuations that they have? Because ultimately, right, you're buying these treasury companies to get levered exposure to Bitcoin, essentially. But you're paying a fee for that, right? You are paying for management. You are paying for people's salaries. Why not just buy Bitcoin, right? So the reason I brought up Jack Mallers' conversation, it was quite enlightening to me. He was coming to the conclusion that, like, hey, listen, like ultimately we kind of have to pivot our strategy so that 21 is a cash flow producing business, right? So the business produces cash flow and they use that cash flow to buy Bitcoin, right? I think Nakamoto is going through something very, very similar with the acquisition of BTC Inc. BTC Inc. is what owns Bitcoin Magazine, is what owns the Bitcoin conference. Of course, 21 is backed by Tether and SoftBank, so it's like enormous investors. I think the question on everybody's mind, and I think this is where you need to ask yourself as an investor if the risk is worth it for you, is do you believe that they can actually successfully pull off these pivots, right? Because if you do, then you're getting a 99% discount, right? So I think that's the question on everybody's minds right now. My take on this is I think that if they can figure out, because the issue, guys, here is the valuations, right? Like if these treasury companies had revenue behind them that isn't just tied to the price appreciation of Bitcoin, you could make an argument that the valuations are justified. I think what the market is signaling is that they don't have confidence on a Bitcoin only type of play. So like they don't have confidence in treasury companies just holding Bitcoin, taking on more debt to buy more Bitcoin. It seems like right now that's not to say, I'm not saying this can't change when the price of Bitcoin turns around, right? I'm not saying that. I don't know, to be honest. But what the market is signaling right now is that like it needs to see a cash flowing business. Now, if the price of Bitcoin starts to appreciate again, and we start to head into the 250K, 300K, 400K, 500K region, which I think we should easily see in the next, 4 to 5 years, like, are you telling me that these companies that are holding tens of thousands of Bitcoin, you're telling me that their stocks aren't going to go up? I think they will, right? It just doesn't make sense. Like, I don't see how people wouldn't get caught up in the mania. And then that 99% discount, you look like a genius, bro. Don't they have isn't there like a cutoff date, right?
Yeah, I forget what the date is at this point, but I thought it was like 6 weeks. So it's coming close. The clock is ticking here. So we'll see what happens.
I want to read some of the chat. So Ultra Dip says, I don't know, man. Strive is extremely capable and has a damn good leadership, but Bitcoin isn't their only angle. This is what I'm trying to tell you, right? And by the way, I love the Strive CEO. He's the man. I got to interview him at the Bitcoin 2025. I like Bailey too. I love the Bitcoin conference. I like Mahler's also. Like Strike is fantastic. We got another one. Investors paid a 40x premium on Naka so that the executive team could have fat salaries and travel on private jets, all while the stock tanked nearly all of its value. MSTR will be the sole survivor. I mean, I can't comment. I don't know. I guys, I'm just a Bitcoiner. I just buy Bitcoin. If I had money, I would buy Bitcoin and put it in self-custody. So I'm not the person to talk to you about,
No, but can we not necessarily just talk about the Bitcoin treasury companies in general, but like what we've been saying? I want to talk about the capitulation a little bit.
Yeah, well, wait. I want to check out these comments. Think those zombie treasury companies are going to bring the new dip. I got smoked buying MSTR last summer. A little did I know the entire system was attacking it. I think that's everything. I think that's all the comments.
Okay, my question for you, Nico, is, as we've been saying, usually to mark the end of a bear market, we see a final capitulation moment, right? We see a lot of Bitcoin being sold by some of the big, we always joke about like, there's always a Bitcoin sacrifice at the very end of a bear market. Now, at this point, we've seen, I can't even count how many public Bitcoin mining companies pivot to AI. They've sold, tens of thousands of coins. We've obviously saw the OGs sell a lot of coins around 100K for the last, 6 months, 9 months. Now we're getting to the point where I don't know if this is the end per se of the bear market, but we are starting to see signs of what historically marks the end. So the question I have for you, Nico, is like, what would be a final capitulation? These companies selling all of their Bitcoin, or does just them selling a portion of their Bitcoin count as a final capitulation in your mind?
I'm going to answer that question right after the break.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com.
All right, everybody. It was smooth. It was silky smooth. So, okay. Here's my take. Here's my take.
Sorry if you guys heard that call. My silencer turned off. Yeah, silencer. My do not disturb got turned off.
Chat is savage, man. Like people,
dude, that's what they do.
Yeah, look at this comment from Jake Fever. Buy Naka options, own Bitcoin. Naka calls are cheap with huge upside. See, like it's so divided. Like I just can't give you guys a good opinion on this because I'm just not a stock person. If they're rehypothecating, they could absolutely blow.
That's about Coinbase. That's about Coinbase.
Okay. Num.
What is the final capitulation going to look like? Is it 100% of balance sheets getting liquidated, or does a 20-50% sell off of their holdings, would that count as a final capitulation moment?
I think I think one of these big companies are just going to blow up. I think that's what's going to happen.
Bitcoin Treasury company.
Yep.
Completely liquidated.
I think
that would be brutal.
One of them, it's literally, it's going to be.
Could it be a small one?
No, that wouldn't. Just historically speaking, at the end of every bear market, there is a giant disaster that happens.
So the bear market's not over until after you capitulate, bro. My 58 sats will not affect the market. Okay.
No. So like, look, like if you're any Bitcoin company in the bear market right now, like, you know, your job is to survive. But I think what's going to happen, what's going to mark the bottom is some type of capitulation event from one of these companies that got over levered a little bit. And I think you might find themselves in a situation where if Bitcoin falls another 50%, which it totally could, you know, they might get margin called on their loans, and then it starts this like kind of cascading effect. That's what I think could happen.
What about what Intra Belden is that? Yeah, Belden says. What if it's an ETF that blows up? That would count.
No.
You're specifically focused on the Bitcoin treasuries.
An ETF, there's no risk there. Like they're essentially just buying like BlackRock is like every time supposedly this is what they're doing. We don't actually know because again, there's no proof of reserves. There's no they're not just making that address public. Like it's in Coinbase.
Trust Coinbase, bro.
It's in Coinbase custody, and you have to trust Brian Armstrong. And from what I heard, essentially, like he just keeps all the Bitcoin in a ledger next to his nightstand. But in all reality, an ETF that I don't think there's exposure like that, because like an ETF, essentially what they're doing is like they're just buying Bitcoin on behalf of their customers, and they're taking a fee for that. They're not like playing games and whatever. Strategy, hell no. Sailor's a honey badger, bro. That guy
strategy is no way gonna blow up.
Guy survived 20 years. His company was down like
literally 99%.
The .com bubble like crushed him. The dude remained. So strategy is not going anywhere. I would be personally, I'm not a stock guy, but under $100 Bitcoin, under $100 strategy stock, like, dude, like that's a no-brainer in my opinion. And then what he's doing with STRC
is crazy. They're buying like 1,000 Bitcoin a day right now. It's nuts.
So effing cool. And then he's just dropping memes. So I don't foresee it being strategy at all.
It's a non-zero. It's a zero chance.
I'm actually quite bullish on MicroStrategy. So I don't think it's going to be strategy. I don't think it's going to be 21 because their backers are are literally like it's Tether. It's just not going to happen. And again, huge fan of leadership and all that. Nakamoto, it's very difficult for me seeing that. Just because of like how much influence they have in the space. Like, they run the Bitcoin conference, huge fan of that. UTXO management, they've made some great investments in MetaPlanet and stuff like that. So like, I don't know. I don't foresee them being one of them. Even though like it doesn't look too good. From like a price action perspective, but I don't foresee them being one of them. But again, I think that the capitulation event this cycle is going to be some type of treasury company, blowing up. That's what I think. I think it's going to be a levered one. Some type of levered event unravels. Like a company that borrowed money to buy Bitcoin and they bought at like 110 or 100,000. When Bitcoin goes to 30,000 and they're on the hook for those payments, that will like set off a domino effect. That's what I think.
Oh man,
that's what I think.
I'm so tired of winning. I can't wait to win more.
That's what I think is going to happen. That's what I think is going to happen. Coinbase is custody for all of them. Coinbase and other exchanges will not run out of Bitcoin. There's always buyers and sellers trading each other. It's going to be Chainlink in 10 years. They will be the hub of everything.
What?
You're on the wrong.
Yeah, hold on. I have not heard that name in so long.
I didn't even know they were still. I didn't even know Chainlink was still around. Jake Fever says if MSTR gets to 100, no one shall buy STR. They should just
should buy STR. They should just buy MSTR. Well, they're hitting different markets, so
it's different
markets,
it's
buyers. Different pools of capital.
Like, do you want fixed income? Do you want the upside of buying like a stock like MicroStrategy? Past history,
dude. Chat, guys. Nico just found the chat, and he's having a lot of fun on the chat today.
Let's check out Rumble. Let's see how my ass is getting kicked on Rumble because 35K BTC. Now you're talking shit, Nico. Here's the thing, Mr. Roboto. The fact that you say that is not good, right? Like it's not good.
Yeah. Wait. Can we do that one thought experiment the other day? We were sitting in the studio. We had a couple people over. It was like, I don't know, 6 or something of us.
We had, okay, so let me give a little bit of context.
Yeah, this one's funny.
We had an offsite for Simply, and we had like 5 or 6 Simply team members here in the studio. And we brought in like a major kind of mainstream political commentator.
Who was also a Bitcoiner.
He has a huge channel too. And like, obviously, if you have 3 podcasters in a room,
it turns into a podcast.
And it condensed like in a small, and it's not, the studio isn't small, but like it's
a room.
It's homey for like 6 people, you know? You're going to get into some like crazy type of conversations. Right. And I remember, we were obviously talking about price, and 5 out of the 6 people were like, there's absolutely no way that Bitcoin's going to go under 40K. And when I heard that, I'm like, That's not good.
And this is where I think this is where I started to reevaluate my position, because you guys know me. It's like when I'm on the side of the majority, I'm like, damn, I'm probably wrong. And Nico's like, all right, everyone raise your hand in the room that thinks that we have already bought him. And we're like making arguments, and literally all of us raise our hand, and Nico's the only one. Well, it's Nico and Sophie, which is just basically Nico squared. The only ones like, no, we haven't bought him yet. And he's like, see, everyone in here thinks that we have bought him, which makes me think it's going to go lower. And I sat there, I'm like, damn, I might be on the wrong side of this one.
Look, so like it again, the fact that you're telling me that is not a good sign, right? Like the psychology of capitulation is despair, right? Like you're literally like, oh my God, this thing's going to like 15K, right? Like that's how you're going to feel, right? When this starts to, unravel, so to speak.
The chat like that story. The chat, they're laughing with me. I don't know if they're laughing at me or laughing with me, but anyway, Nico, let's. Oh, he's reading the chat. Let's.
Yeah. Only thing I would worry if it was
this show is so cooked, Ron. All right, let's wrap up today.
All right. Anyways,
wait. Intro. Haha, damn, I agree with everyone. What's about to go wrong? That's literally my thought process. That's what I was thinking. And I was like, I might be wrong.
I'm glad. Yeah, let's wrap this up. So I'm glad to just wrap this up and put a nice bow on top. Elaine, yay, 15K, I'm in. So to like wrap this up and put a nice bow on top. Here's the TLDR, everyone. Y'all are understanding that we're in a bear market now. That's a good thing. We have major capitulation events from major companies pivoting from Bitcoin, pivoting away from Bitcoin, selling Bitcoin. Those are all very, very good signs. Those are all very good signs, ladies and gentlemen. Very good signs, because that means that the bear market is in full force. It's happening. It's transpiring, right? And again, that obviously creates opportunities for you guys to get discounted prices in Bitcoin. So, also too, I will say that if you guys want to take out a loan right now, it's like literally one of the best times, historically speaking, as well. So obviously you got to be careful. Of course, we recommend our sponsor, Ledin. They're awesome. If you use the link, you get 0.25%. But again, you got to be responsible with this shit, because I've said this like every single time and you guys don't listen to me. Bitcoin collateralized loans are super powerful if you use them responsibly. If you go ape shit and put 60% of your stack into a loan and then you get margin called, bro, you're being reckless. But if you're taking 5 or 10% of your stack and you know that the price could go down 50, 60, 70%, and you could just collateralize that loan more, then you're fine, right? But if you're being reckless with the loan, like you might potentially get margin called. But again, if you're taking out a loan when Bitcoin's 60% down, like, you're probably gonna be very happy in a couple of years, right? So anyways, if you guys enjoyed the show, you know what to do. Smash the like button, subscribe, all of that good stuff. Thank you guys so much for tuning in. To Simply Bitcoin Live. What does the Rumble say?
Inverse Nico effect happening.
Sailor has created a high yield savings account supported by you exited out of it, man. What happened?
No, that was an old comment. It just said Inverse Nico. Said Inverse Nico.
Inverse Nico.
Yeah.
All right. Well, I've been right so far.
Dude, let the chat believe. Let the chat believe.
I do want to give a shout out to our sponsor, Bitcoin 2026. Is going to be one of the largest Bitcoin conferences of the year. It's going to be in Las Vegas, Nevada, April 27th through the 29th at the Venetian Hotel in Las Vegas, Nevada. You're not going to want to miss it. Again, this is the Bitcoin Super Bowl weekend. It's going to be awesome. It's going to be fantastic. See you guys in Vegas, April 27th through the 29th. It's literally in less than 30 days. Las Vegas, Nevada at the Venetian Hotel. Get your tickets now. Use promo code SIMPLY. Again, promo code SIMPLY to get 10% off. See you guys in Vegas. Viva Las Vegas. All right, everybody. I'll catch you guys on the next one. Take care, everybody.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.